Good morning. For Traders Exclusive, this is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, let's take a look at the equity markets. Equity markets continue to be in the trendless range, pretty much what we called last week the chop zone. Pretty much the S&P 500 is trapped between 2,800 and about 2,532, and we keep getting volatile swings to the upside and to the downside. And similarly on the NASDAQ composite, pretty much in a range between 7,500 and 6,600. So until that range is broken, either to the upside or downside, it's really unclear which way the market wants to go. Now, it looked like things were starting to find support. So what I'm talking about is we look at leading stocks and we see how they act during a period like this and try to get a sense of direction which way the market wants to go. So coming in today, it looked like some of the leading stocks like Amazon, Netflix, or Nvidia were holding up support. I mean, they cut down through their 50 days, found support at 65 days, and bounced and held up. However, this morning we see that breaking down. So when you see leading stocks breaking down, that's kind of a bad sign. Doesn't mean it's over with. You know, we still have the S&P above its 200-day moving average. We still have the NASDAQ well above its 200-day moving average. So we use a combination of looking at the indexes. If they break down below their 200-day moving averages, things may get worse. And also, if we start to see these leading stocks who aren't able to hold support and start breaking down, that's also a bad sign. Now, also coming into today, we had a few stocks that are, bouncing, or you weren't even aware that the correction was going on. That's stocks like Oxygen, that symbol is AAXON, holding up pretty well. So take a look at a stock like that, see if it's going to continue to hold up. Stocks like SGH Holding, that symbol is SGH, pretty much holding up near its highs as well. But again, if stocks like that are holding up start breaking down and no leadership doesn't develop, especially in the big liquid leaders such as Amazon, Netflix, Nvidia, or you can even take a look at a stock like Adobe, symbol ADBE. If these leaders start breaking down, things may really get bad for the market. Now, you need to be flexible, need to keep an open mind because we're still just in this period of indecision. Look to see if the market can make a break one way or the other, or until then, raising cash is a pretty good idea, or if you have a longer term outlook like we talked about last week, you can stay in the stocks until you see a complete breakdown. So right now, the market is still undecided which way it wants to go, and you should just treat it as that. Keep it pretty simple. If things start breaking down worse, we'll make it a market correcting further. That's always to be seen. Or perhaps we bounce from here. We've been able to hold the 200-day moving averages, so maybe we get a bounce, and if it sustains, we can break into new highs. That'll be a whole nother story. But again, the point here is stay flexible. The market's in this chop zone right now, so just be careful. So as always, let price and volume be your guide. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago, and good luck.